What's up guys, welcome back to my channel.
Earn it, save it, invest it.
In this video, I'm going to show you how I plan to take my $7,000 and change it into $100,000 just by using the stock market. Now, some people think I'm going to be looking into penny stocks and get really risky and try to get something that changes it really quick. That's not going to be the case. You might be thinking I'm going to dump a bunch of money and thousands of dollars so I can build the balance up. That's not going to be the case either. What I plan to do is start off with $7,000, put $200 a month, and over the years, it's going to turn into $100,000. I just have to be consistent, and I have to make sure that I'm diligent and I don't get emotional because the stock market is very emotional. So all I have to do is make sure I limit my mistakes, be consistent, and I think I'll be doing just fine. And what this can do is hopefully it can show you what you can do with your money, right? Turning whether it's $2,000 into, what would that be, like a $45,000, something like that, right? Doing something with your money and having it be very easy, consistent, and that's what I really want more than anything, is to make it easy, right? People think having to build a portfolio into hundreds of thousands of dollars is going to take a lot of time and effort and all of that, where really it takes consistency. It takes consistency, be diligent, and just be smart. Don't make a lot of mistakes. And I've made my mistakes already, and I'm planning to use all my knowledge into this process of turning my $7,000 into $100,000 just with $200 a month. So that's the plan, right? $7,000 currently into $100,000, and I'm only going to be investing $200 a month. All right, so the main way that I'm going to make this happen, turning the $7,000 into $100,000, is by using what every investor's best friend should be: compounding interest. If you don't know what compounding interest is, it's essentially taking your gains from the previous year and you're making money on that, right? So let's say you have $100 and you go up 50%, right? $100, 50% is now $50, right? So now you're at $150. But let's say you go up 50% again. You do not go up $50. You now go up $75, because half of 150 is 75. So why did it go from 50 to 75? Well, it's because you are now gaining 50% on the $50 you gained the year before. So not only are you getting 50% on your initial money, but you're also getting 50% on the money that you earned last year. So that's why it will continue to go up and up and up. So if you've ever heard of people trying to time the market, right? You want to buy at the lowest and sell at the highest and try it. That is a recipe for disaster. Really, what you want to have for long-term success is time in the market, right? And when you even think about people who are older, who are in their 40s, 50s, 60s, and they're thinking about investing in the stock market, they're really going to be careful. They're going to be conservative. They're not looking for the big, oh my God, get boom, because they understand that it's about the time in the market. You have to be really risky. It's possible. You can get really good gains over a short amount of time, but you have to be super risky. Typically, people don't want to be super risky, so they just, they just want to invest in the index fund. So again, compounding interest is huge. What you're making on your money from the year before, and it just keeps piling and piling and piling on. So what I'm going to use is a compounding interest calculator. Now, I have these all marked. I have them all marked at zeros, and I'm going to show you exactly. It's simple math of what I plan to do. I plan to take off, and I said I had 7,000, but I actually have 7,200. I'm going to take that 7,200. Now, this is a compound interest calculator. I'll try to put it in the description, but it's from bankrate.com. It's a very simple calculator. I think everyone should be using this, and I think it motivates me to invest. And I think the people that I've shown this calculator, it motivates them as well. How much do you have saved currently? I have 7,200 in the account that I plan to use for this process. How many years do you plan on saving for? Now, or investing, right? Now, this is going to be maybe longer than what most people want to see, because again, people like to get rich quick. But I am going to run these numbers based on a 10-year projection. That's a long while, right? But I'm only going to be 46. I'm still going to be young. That's 46. I still have a lot of things to do, and I'll still have another 10 years after that, and probably another 10 years after that. So 10 years is not that far. 10 years, my daughter was born. My daughter is 10 years old. It feels like that. My rate of return. Now, this is how much I plan on getting in terms of gains every single year. Typically, it's 12 to 15% in an index fund, right? The S&P 500 has gained about 12 to 15%. The NASDAQ has gained probably about the same, a little bit more, because the NASDAQ has just been a little bit better of a performer over the S&P 500. But I'm also going to be picking individual stocks that I think will outperform the market significantly enough to boost my average to 20%. I think that is definitely doable. And so I'm going to keep it at that percent, 20% for the next 10 years. And I do plan on doing $200 a month. So I'm going to start off with $7,200. Over the next 10 years, I'm going to invest $200 a month, and I plan on getting 20% a year on that money, right, per month, and it's going to be compounded annually. And so that comes out to $106,881. So again, I plan to take the $7,200 and turn it into $106,000 simply by being in the market, getting 20% over the next 10 years. I'm going to be making videos of my process, and I understand it seems like a very long process, but I will probably be making lots of mistakes, and I'll probably have plenty of successes as well. And you really learn more from someone else's mistakes than you do off their successes. There's a lot of things that just happen to be luck of the draw, or you can't replicate someone else's success exactly, but you will definitely be able to contribute obstacles that they faced or mistakes that they made to your own situation. Mistakes that were common that anyone can make, right? Not a luck of the draw that probably most people won't get, but a mistake that they were approached with, or an obstacle, or whatever it was that they had to get over, or that they failed at the first time and then the second time they were successful. You learn a lot more on that kind of stuff. So that's what I plan on doing over the next 10 years. I'm planning on making a lot of videos about the stocks I'm buying and selling, and how I'm reallocating my portfolio and balancing it and doing all of that. And I'm planning to show that I can make, a lot. And again, I will be investing $31,000 over the next 10 years too. That is, I will be contributing my own money to it. So it's not like I'm gaining almost $100,000 purely of profit. No, I'm gaining actually $75,000 of profit. It can be more, it could be less. But over the next 10 years, this is my goal, and I'm going to keep at it. I'm going to keep making videos. I'm going to try to be as consistent as I can. I'll be a lot more consistent in my investing than I will be in making the videos, that's for sure, because the videos just take more production, longer time, and all of that stuff. I have to be in a certain spot and all of that where everyone can invest on their phone now. I can look up a stock's valuation. I can look up a company's balance sheet, their income statements, their cash flows. I can check out all their numbers, their financials. I can go to, the earnings releases and their investor relations and see what they're talking. I can do all of that on the phone. Making these videos is a little bit harder. So I'm definitely going to be 100% consistent with my investing. My videos might be a little bit somewhat not as consistent, but again, with any success in life, you have to have consistency. So I plan on having consistent videos and consistent investing. So again, $7,200 over the next 10 years at 20%, with just $200 a month, it's going to be $106,000. Now let's try to go into something a little bit more realistic for other people, right? Let's say you have $1,500, and over the next 10 years, you go, 13%, and you put in $200 a month or $100 a month. Okay. Someone's going to say, hey, you got $27,000, over 10 years. And you're like, that was nothing. But you invested only 13. You doubled your money. If I said you get to double now, a lot of people will get into the roulette type of mentality, right? Oh, just put it all on black and just double my money now, right? Double my money in a spin, right? Why not? You can also lose it. You can lose it. The odds of you making money in the stock market go up and up and up. I don't know what the exact numbers are, but I will put them up and I'll ask ChatGPT, what are the odds of you making money in the stock market over the years? And I bet you it's gonna tell you, over the first month or so, and the odds of you making money are actually low. The first month, the first 3 months, the 6 months, the first year, it's not super low, like, negative 90%, but you're a lot less likely to make money in the stock market over a short period. Once you reach 10, 15, 20 years, it's almost at 100%. It's almost at 100%. Now, again, you could say, well, making money could also mean making $1. I could be at I could have invested $13,500 and now I'm only at $13,501 and technically that's guaranteed I've made money. That's true. Just invest wisely. Invest in good index funds, into a couple good individual companies that are just really good, and you'll be fine. You will be fine. That strategy has been proven over and over and over, and until it's proven otherwise, I think we should just keep following that strategy, right? You don't want to jump off a moving train. If the train's moving, if this is what things are going, this is why, once the train stops, okay, then I'll get off and I'll try to figure out a new strategy and process of making all this money. But I feel the less risky way of making a lot more money and getting a good return on my money is the stock market. It's also easier. It's very liquidable. I can right now sell all those stocks as long as it's, the stock market time, right? The market's open. I can boom, sell them all, withdraw my money, and within just a couple days, I got all that money. With a house, you can't do that. With a lot of other investments, with a business, you can't do that. With cars and with so many other things in life, you just cannot liquidate so fast. You can liquidate watches and stuff like that, right? If you really wanted to do that and go to stores and stuff. But the point is like, that you might also be having to sell at a discount. Whereas in stocks, unless you're in a stock market correction or crash and you're being forced to sell at a discount, otherwise you're selling at a profit. So it's one of those liquidable assets that gives you a higher chance of profits. That's what it seems like to me. So I'm going to invest $7,200. I'm going to start off with $7,200. I'm going to break down my portfolio in another video of exactly what I have in there. You know what? Let's just quickly break it down. Okay, so in my portfolio that I have currently, and I already have investments into it, I put it at $7,200. So now it's currently at $77,204. So that's like perfect. The current stocks I have right now are Amazon, Celsius, EA, Fubo, Hims, Meta, Nike, and the TQQQ, which is a 3x leverage index fund. I'll explain that a little bit later. But these are the stocks that I have currently. All I plan to do right now is add on top of these. I do not plan on selling any of these. If I do, I'll put it out there. I plan to put all of this out there and just like, hey, this is what I'm doing. These are the mistakes I made. This is success I've had. And I think I'll do well. So these are the ones I have right now. I currently, like I said, it's at 72. The market value of all these stocks is actually under 7,200. It's at 7,100. So I think I will use that $75 that I have cash and buy into something this week. I'm going to do, it's either going to be $50 a week, $100 every 2 weeks, or $200 a month. Right? It's going to be one or the other. There's not one way I'm going to go a month without investing $200. I do also want to put this out there. There will be times where I might deposit a little bit more. If I see a big stock market crash happening, I might put in just another $100 and just try. You really want to take advantage of those days that are big drops, big discounted days. I want to take advantage of that. So I might put in a little bit more, and maybe I'll even use that against the next month. I don't know. I'm going to figure that out. But a minimum of $200 a month. I prefer to do it $50 a week. That way I'm just consistent every week, maybe every Friday, just buying $50 of one of the stocks that I probably already own and just adding on to that position. But anyways, that's my plan. This is the portfolio I currently have. And I will break down my actual portfolio in another video when I break down, okay, this is where I'm at, and this is, where my next buy, and kind of breaking down my portfolio and what I think about each individual stock. So again, I hope you like this video. Please hit the like and subscribe button. It does a lot for the channel. I know there's not a lot of you out there liking and subscribing to my stuff, so most of you are not going to see what I'm saying right now, but at the same time, if you do watch this, I'd really appreciate it. It has helped my channel before. I made a good video and I just fell off, again, inconsistent, and then it destroyed it. So I'm trying to get back into it, and I hope you guys like this, and I hope that you learn from my mistakes and my successes, and I hope I can motivate you to do something very similar. Investing into yourself, long-term, consistency, and just being diligent about it. So again, thank you for watching, and never forget to
earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.